Okay, could I just ask all members that if you're not speaking at the moment, could you just mute, please, because it picks up background noise. Thank you, everybody, and good morning. I would like to begin by welcoming those members of the public and press who are watching the live stream of this meeting via the Council's website. Members, you are by now fully aware of the need to keep your video camera switched on for the duration of the meeting and to keep your microphone muted except when I invite you to speak. Please click the raised hand function if you wish to ask for a question or a comment. There is always a risk that we may run into technical issues, and I would ask for your patience if we do. That has been tested in the last month and we did very well. Should this occur, I will declare an adjournment while the fault is addressed and the public broadcast will be paused. If it is not possible to address the fault, the meeting will be abandoned until such time as it can be reconvened. Can I also remind members and officers and public speakers that all virtual meetings will be recorded and these recordings will be published on the Council's website. Just going to open up participants. Excuse me 1 second. Thank you. Members, I will begin by calling the names of the members of the committee to establish your presence. Please, can you confirm your presence when you hear your name? Councillor Ian Bates.
Present.
Councillor Chris Bowden.
Present.
Councillor John Gowing.
Present.
Councillor David Jenkins.
I'm here.
Councillor Linda Jones.
Present.
Councillor Peter MacDonald.
Present.
Councillor Terry Rogers.
Present.
Councillor Mike Shellens.
Here.
And Councillor Tim Wotherspoon.
Present.
And also myself, Councillor Mark Goldsack. So we'll begin with point 1, apologies for absence. Nick, have we got any apologies for absence?
None received, Chair.
Oh, sorry, Dan, you're doing that. I'm slightly confused, but
yeah, no worries.
Could we just, on behalf of, could I just take a point at the start of this, please, just to wish Dawn well in what she's facing at the moment. So just pass that on, please. Okay. Does any?
If I may, Chairman, it's Councillor Terry Rogers. I have to leave the meeting at 11:20. Unfortunately, my wife has a hospital appointment.
Thank you for bringing that to our attention, Terry. I didn't know about that, but that's very kind of you. Thank you. Does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest? If so, if you could do the raised hand function. No, there's nothing there. So
Sorry, Chairman.
Sorry, Mike. Yes, go ahead.
I'm not sure that this is either disclosable or whatever, but when we get to the Hinchingbrook Park, I live adjacent to it.
I don't think we can take any steer on that, Mike, other than from yourself. I think that my first thoughts were lucky you, to be honest with you, when you said that. But I don't think that's a significant issue.
I agree, Chairman, but I
that's my
thought
opinion,
I would mention it.
Do we have any officers online that could ratify that? If not, then we will carry on that basis, Mike. Are you okay with that? Thank you. Right, item 2, public minutes. We are being asked to approve the minutes of the meeting of the 19th of June as a correct record. Can I ask members who any member that does not agree with the proposal to click the raised hand function on the right screen now? Not seeing any, so I see no objections to the proposal to approve the minutes as correct. So we will take this as carried and they will be signed in due course. Item 3, the action log. An updated action log was included in the published papers for the meeting. Officers, do you have anything you wish to add to the action log? Wow, stunned silence again. We're going well this morning. If members have any questions on the action log, would they please raise their hand function now? Okay, so in the absence of that, then we will move on. No members have indicated that they wish to speak, so we will take the action log as noted. Number 3, petitions and public questions. We have one public question from a Mr. Michael Sadler. Unfortunately, Mr. Sadler is unable to present his question in person, so the Democratic Services officers will read the question on his behalf.
Thank you, Chair. So this is the question. The County Council has discussed climate change and environment strategy on the 19th of May. In your previous meeting, you mentioned that within energy efficient low carbon buildings, priority will show leadership by getting our own house in order and replacing oil and gas with renewable heating in our own buildings. I wanted to ask if this is being considered for every acquisition and new building, alongside with your commitment to promote walking, cycling and public transport for staff to access buildings. Is this a firm commitment or just an aspiration within other contexts? And that's the end of the question.
Okay, thanks very much for that. Well, thank you for your question on this important matter. You are very right that the council's approved the climate change and environment strategy. Energy efficient low carbon buildings is one of the priority areas. In the action plan that was also approved by the council in May 2020, we have backed this up by committing to implement plan of property retrofit into all buildings owned and occupied by the council, aiming to be fossil fuel free, that's difficult to say, but fossil fuel free using renewable heating sources instead of gas or oil by 2025. The council's property and energy teams have already started work on this plan, with the first renewable heating projects expected to be completed within the financial year. All buildings in the council both own and occupy, including new acquisitions, which are currently heated by oil or gas, will be put forward for this programme of works. Business cases will be developed for each building, and the final decision for each individual building will be made taking into account all the financial and environmental costs and benefits of each option. Thank you once again for raising this very important question. I will also provide a written response to you within 10 working days. Okay, thank you very much. We will move on to item 4, which is the Cambridge Southwest Travel Hub, Greater Cambridge Partnership and land proposals. Can I invite the Senior Project Manager, Tim Watkins, please, to introduce the report?
Thank you, Chair. So a summary of the report is that it asks the County Council and therefore members of this committee to agree that the county should acquire the land parcels needed for the Cambridge Southwest Travel Hub scheme. The scheme is being funded and project managed by the Greater Cambridge Partnership, and the scheme is a new travel hub between Harston and Trumpington. It has been developed by the GCP and followed DfT government guidelines, including a number of public consultations and GCP executive board approvals where appropriate. GCP will be paying for the land purchase. However, the report is being presented to the C&I committee today and members, as Cambridge County Council are the accountable body for GCP, and so GCP cannot purchase the land in its own right. Cambridge County Council and GCP officers have worked together and commissioned an independent land valuation of the land to be acquired, and the report details the land needed for the scheme. The decision is needed regarding land parcels 2 and 3 as highlighted in the report, and land parcel 2 is considered to be a key decision as this is triggered by the valuation of the land. I've gone through in the report all the 4 land parcels needed for the scheme, as without all the 4 areas, land areas together, the scheme cannot be delivered. So I'll hand back to the chair and take any questions through the chair.
Okay, thank you very much, Tim. Would any members of the committee wishing to ask a question now, please raise the hand to do so? Okay, first up, Councillor Mike Shellings, please. Need to release the mute, Mike.
Yeah.
Perfect.
Finding out what I have to do and then doing it are 2 entirely different things. I think 3 points. One is, why are we allowing an 800-yard gap between them and us? Secondly, once we buy 2 and 3, what happens if 4 doesn't come through? And finally, once this is all done and dusted, the land comes over to us and we get the costs of maintenance and operation, and I don't see any income. And I just wondered what the proposals were for that. Thank you.
Okay, good challenges. Tim, do you want to come back on them now?
Yes, of course. So that the 800-yard gap, I wonder if Councillor Shelling should just elaborate on where the 800-yard gap is.
need to unmute again. This is between us and the Park and Ride.
So the site connects both the new Park and Ride proposed and the existing Park and Ride, Trumpington Park and Ride, and there is a continuous connection. I'm not sure where the gap is referred to. Then the second point relating to land parcel 4. Land parcel 4 is currently owned by Highways England. The land exchange process is will be a process between, in this instance, the County Council and Highways England, and that process is well established. But it is a formal process that officers have to go through in order to be assured that the structures that are being acquired meet what's called an approval in principle, an AIP, and it's just to make sure that the structures are sound. So it's a process as opposed to a formal land acquisition.
The last point, Tim, was on maintenance.
Oh yes. So currently, the GCP makes a contribution to the operational running of the Park and Ride sites, and that would be replicated at this site, the new site, when it becomes operational. The period after the GCP no longer exists or ceases to be, then Cambridgeshire County Council would be required to take over the asset, and I suppose that is part of the consideration that the County Council has to consider, but the GCP will be giving over the land that it has paid for effectively, and giving it over to the County Council as an asset.
With respect, if I may just continue, Chairman, you told me what needs to be done with respect to Area 4. You didn't tell me what happens if it doesn't happen.
So if Area 4 is not able to be agreed between the Highways England and the Highway Authority, which is the County Council, then an alternative route would have to be considered on the highway.
And do we have any indication as to what the maintenance and operating costs would be come the end of the process?
To be honest, I don't have that figure off the top of my head, but they're in the outline business case and the full business case. There will be an indication of what the operational costs will be. The outline business case has been completed, and I can supply that information after the meeting, and the full business case will be completed should planning permission be granted for the scheme.
Good. Well, if you could send those to me, I'd be very grateful.
Yeah,
thank you.
Take that as an action.
Tim, could I ask you to circulate them to the committee, please? It's right that everybody sees them, but it's a good point from Mike, well raised. So, okay, thank you, Councillor Shellings. Councillor Tim Wotherspoon. Tim.
Yeah, sorry, Chairman, I'm a bit slower this morning, but it occurs to me that perhaps I should declare an interest as a member of the Greater Cambridge Partnership Joint Assembly and its immediate past chairman. But we don't take decisions, so I'm not in a position of management of that organisation. So I'm intending to stay and continue in the discussion and indeed vote.
Okay, but I think that's a good point noted. Thank you very much, Tim. Councillor Jenkins, David, please.
Yeah, can I just labour Mike's point a little bit, please, Chair? I'm understanding now that at some point in the future, undefined in the paper, GCP will cease to exist and the County Council will take ownership of this asset and be responsible for operating it. There are undisclosed costs and revenues associated with that, and I really think they should have been in this paper, because otherwise we're signing away blind an obligation to look after an asset sometime in the future.
Okay, Tim, do you want to come back on that at all?
The paper recommends that the council and the committee seek to approve the land purchase. The actual use of the site will be determined by a different committee, by the planning committee. In terms of the operations of the site, I will provide that after today's meeting through the outline business case, as I'm happy to do so.
But Chair, what happens if that outline business case tells us we're going to be having to shell out £1 million a year?
Seems like a fair challenge to me, Tim. To be honest, I think. What are the timescales on this decision, Tim? I'm not one for kicking things down the road, but what are the timescales on this?
Well, officers are in negotiation with the owners of the land, and obviously that's the key timeline. In relation to the scheme will be is expected or programmed to be open in 2024. So obviously there is time for me to provide the outline business case and the operational costs. However, the idea is that the land is procured in advance in order to secure early implementation, and work such as stats diversions can be undertaken prior to the main contractor coming on site.
Okay. David,
Chairman, this seems to me to be a case of verdict first and evidence second.
Right, if I can come back on that, Mike. David, if I can just take a hold on your point there, not closing it, right? If I can take a hold on that, I've got a couple of other people to bring in, and that may add some more meat to this before we move to any kind of decision. So, Councillor Bates, Ian, please.
Thank you, Mr. Chairman. I think it's important actually to realise why we are asking this question to purchase the land. What is being proposed is to build a park and ride site. We all know that the normal circumstances appreciate the fact that we're not necessarily in a normal circumstances, that park and ride sites have been extremely successful in and around Cambridge. And the reason why this is needed is if you look back, the current one in Trumpington, despite it being extended, was virtually full every single day by about 9:30 in the morning. So the principle of what we're trying to do, or the Greater Cambridge Partnership is trying to do, is to stop cars going into the centre of Cambridge to reduce congestion. I cannot believe that Highways England would not see that as an advantage. There has been, I'm fully aware that there has been discussions with all those land partners, particularly obviously Highways England, of course, because these plans are not new. They've been on the table for some considerable time. And with regard to maintenance, I think you'll find Greater Cambridge Partnership have just gone through a gateway review, which has been successful. That, of course, means another 5 years. And then there is another review in 5 years' time. And assuming that is successful, then that's 10 years. So what you're talking about here is something that might or might not happen in 10 years' time. If somebody can predict what is going to happen in 10 years' time in respect of maintenance, I think they're a better person than I am. So I'm entirely happy with what the proposals are here, Mr. Chairman. Thank you.
Thanks, Ian. Again, David, I'll bring in Linda if I can, and then we'll come back to your point. Councillor Jones, Linda Jones.
Thank you. Well, I was about to make the points that Councillor Bates has made, because there's a councillor who lives in Cambridge where, in fact, the county and the GCP are trying their very best to cut down congestion and pollution and to deter traffic from coming into Cambridge. This site is long awaited and absolutely essential. It seems to me that the issues that are being raised, reasonable, are about maximum exposure. And I would have thought that after 10 or 5 or 10 years, the county is going to end up owning this site. At the very worst, a future commercial investment committee might decide it wants to realise that value by selling it. So it seems to me the issue of maintenance is a kind of fairly minor issue compared with the significant advantages for the city and for motorists, because of course people can hop on buses and get into Cambridge quickly if it's not congested. So the advantages for the environment and for active travel, which of course we're trying to encourage as a county and as GCP, are really, really important, and we mustn't lose this chance of encouraging them.
Okay, thank you. David, if I could bring you back in on that, then I'm not sure that changed the viewpoint around maintenance a lot for you, but I as promised, I'd bring you back in on that, please.
Thanks, Mark. Look, we've had this issue before, and I'm quite firm on the principle that where other bodies make a decision based on their expertise, then we should not try and second guess it in this committee. And so GCP have said this is the right thing to do. Absolutely fine. And I accept all the arguments, although I'm a little bit more cautious about Highways England because they do tend to move in mysterious ways occasionally. My only point here is that information has arisen this morning, which has come out as a result of our debate, which was not in the paper. There is potentially a liability that should be identified. We can then say, no problem, go ahead, or not. But it was not identified. And so some way or another, we need to find a way of crystallizing it so that we can effectively rubber stamp what the GCP wants us to do, recognizing that we have protected the County Council's longer term interests.
Okay, well, thank you for that, David. There's no more points to be raised in that. Oh, sorry, I thought Terry was raising a point, but I think that was just an arm movement. So there's no more points on that. The issue we've got before us is that we're being asked to agree that Cambridgeshire County Council should acquire the land parcels needed for the Cambridge South West Travel Hub scheme, the scheme being funded and the project managed by the Greater Cambridge Partnership. I think in light of what has been agreed by Tim in terms of sending the information and the timescales involved, I think it's actually right that we do go to the vote on this now and we act accordingly. But what I will do is recognise that and think that I think it's probably right that we do go to an individual vote here rather than try and take it en bloc. Okay, so I will now ask each committee member in turn if they agree with the recommendation. Please at the time unmute your microphone to respond. So I'll just read the recommendation again, and it is to agree that should acquire the land parcels needed for the Cambridge South West Travel Hub scheme, a scheme being funded and project managed by the Greater Cambridge Partnership. So I will now ask Councillor Chris Bowden.
Agreed.
Councillor John Gowing.
Agreed.
Councillor David Jenkins.
Abstain.
Councillor Linda Jones.
Agreed.
Councillor Peter MacDonald.
Abstain, Chairman.
Councillor Terry Rogers.
Agreed.
Councillor Mike Shellens.
Abstain.
Councillor Tim Wotherspoon.
Agreed.
And Councillor Mark Goldsack, myself, is an agree.
Mark, you might have missed me off. Councillor Ian Bates, I agree to the proposals as you've read out.
I don't think there's a might in it, Ian. I think it's a definite did miss you off, and I apologise. You're not on my list, so I do apologise. My problem for looking at the list and not at the screen. So
agreed, Mr. Chairman.
Have we got that?
Thank you, Chair. That's 7 votes in favour and 3 abstentions. Therefore, it's carried.
Mr. Chairman, Councillor Rogers, if I may, to satisfy those that have abstained, could I make a suggestion that the officers do come back at our next meeting with a figure?
Okay, we're going to have a slight discussion later on as to when that next meeting will be in terms of August and/or September. But yes, please.
Thank you, Chair.
All right with that, Tim?
Thank you.
Okay, thank you.
Yeah.
Right, we're going to move on to item 5 then, which is the COVID-19 update. Officers have been asked to bring a report on the COVID-19 response to date for those services for which each policy and service committee is responsible. Given the rapidly changing situation and the need to provide committee and public with the most up-to-date information, I've accepted that this late report on the following grounds. Reason for lateness: to allow the report to contain the most up-to-date information possible. And 2, reason for urgency: to enable the committee to be briefed on the current situation in relation to the council's response to COVID-19 for those services for which it is responsible. Director of Business Improvement and Development, Amanda Askham, would I please invite you to introduce your report?
Yes, good morning. Thank you very much, Chair. I'm hoping that everybody's had a chance to read this. I realise these reports come out 48 hours in advance, but I hope you've all had a chance to look. And of course, as usual, happy to take any questions and bring in other colleagues as required for specific items. A couple of things that I'd just like to mention before we hand over for questions. One is that much of the COVID response work has now become part of our new business as usual. So in the way that we would monitor and manage our property investment portfolio carefully for all sorts of market conditions, COVID has become one of those risks against which we're monitoring daily on a number of things. Same with contract management and procurement. We would normally look at market conditions and keep an eye on that. COVID again is one of those things that has affected market conditions. So we're bringing a lot of this work into our normal practice, if you like, as a heightened risk. There are some new things in there. So the economic recovery work, I think, is an opportunity we perhaps haven't had in the past to work in a different formation with the system. So we're getting some different conversations, different groups of people, and there are definitely some opportunities in that to influence economic recovery in a way that we perhaps haven't had those conversations before. So there is new work in there. But I just really wanted to highlight that COVID has become one of the things we consider within our commercial portfolio. The other thing I'd like to draw your attention to is a slightly heightened risk for us is capacity in the teams that manage our commercial work. So whether that's the commercial team, the property team, the finance team, because we're dealing with this extra pressure and extra risk and uncertainty in the market, there's less capacity than we would usually have to work up new income generating ideas. So it's a priority for us to return to that sort of forward thinking as quickly as we can in the recovery phase. So I'm hoping that the next time I bring you one of these reports, there will be a forward looking back as well as the response to managing the risk. So I think I'll stop there and take any questions if you have any. Thank you.
Okay, thank you very much, Amanda. Would any members of the committee wishing to ask a question, please make this now through the raised hand function. And I see that Linda has beat us to it. Linda, over to yourself, please.
Thank you, and thanks for the report, which is always useful, and one gets used to these reports coming very late because you're trying to make them up to date as possible. Just a minor issue, but one that you might be able to explain. I looked in an interested way at the appendices, which are about the rates of universal credit and local furlough, because obviously those are really important across Cambridgeshire, and found that all the figures only go up to the end of May. And I thought, well, okay, we've got a report that's coming, a couple of days before the meeting in order to be up to date. And yet these figures are actually really very much out of date now. And I'd welcome a comment. It may well be that they're not published in time. I understand that, but if there's any way of finding more up-to-date figures, I think that'd be very useful for councillors.
Yes, that's a very good point. Thank you, Linda. It is indeed that these figures are nationally available and there is a lag. So it slightly depends on the timing of this committee, whether they're out just in time. June's figures were not quite out there, but if it's useful, they're something that we could circulate to members of this committee when they are published monthly, if people would like that. That's probably better than trying to sequence them with these reports. We'll just make a commitment to circulate them when we have the most up-to-date information.
I think that's really helpful. Thank you.
Okay.
Thank you, Linda, and thank you, Amanda. Right, Councillor Shellens, Mike, please.
I do find this muting and unmuting hidden whenever I want to press it. Thank you. At 251, it says we don't expect to return to the pre-COVID levels until 2031. And I wondered what cognizance they'd taken of the possibilities regarding Brexit, or whether that's pure COVID.
If it's all right, Chair, I'll bring my colleague Chloe Rickard in because she sits on the economic recovery subgroup and will be more aware of the specific discussions than I am.
Fine, yeah, go ahead, Chloe.
Thank you.
So in terms of this specific report, it's excluding Brexit. And so some feedback that we have given the consultants that worked up the report is that actually we need some Brexit scenarios in there. So whether there is a clear deal or whether it's very hard and will have a greater impact. So we put the report in and the data into this report, but it's knowing that actually we're going to have to take quite a rounded approach to this and have a series of data available. So we have returned, and I would hope next month we're going to have a wider picture on this.
Thank you. And thank you, Chairman.
Okay, no problem. Councillor MacDonald, Peter, please.
Thanks, Chair. Just a quick question to Amanda and to Chloe. I'm aware from the Mayoral Forum yesterday and hearing from John T. Hill that there is a paper coming forward to the Mayor's Forum and the Economic Recovery Subgroup in terms of supporting recovery right across Cambridgeshire. Can you just tell us what's the mechanism for bringing that to the County Council?
Thank you very much, Chloe. Let's see if she's coming in there. Do you want to jump in, Chloe?
That's okay. So we had our latest economic recovery group on Tuesday where we discussed governance. And so as a group, we're going to meet again in a fortnight to firm up our kind of first draft of strategy and an approach to how we're going to support it across the authorities that are there. And we're looking probably early August will be the first public draft that we can start to bring through our own governance structures. So what I'd be looking to do is to bring that into this forum in August. And if the meeting's not during August, depending on discussions later, then it would be in September. But certainly I could provide stuff away from the meeting to each of you as we need.
Okay, thank you.
Thanks for that, Peter. And again, Chloe. Councillor Wotherspoon, Tim, please.
Yeah, there were references there to the Hatch Regeneris report that was commissioned by Greater Cambridge Partnership and the Cambridgeshire and Peterborough Combined Authority, and it certainly makes sobering reading. It suggests there's a 13% hit across the whole area, and that 2031 recovery expectation for the whole area is actually an average. It suggests that in South Cambridgeshire, for example, it won't recover until 2033. And I see that, well, I'm hoping it's in this report, it certainly was in the report that came to E&S yesterday, that you are actually treating this report with some, a little bit of skepticism and perhaps looking at other sources of information going forward to see whether this report may perhaps have taken an unnecessarily pessimistic view of the future, given many of the strengths that we have in this part of the world, particularly in life sciences, may be in quite high demand going forward. So.
Yeah, thank you very much, Tim. I mean, I think the thing with any report is it's always an opinion starts to form and then the evidence forms around that opinion. And with anything we do, we will take in a whole range of evidence. So as Chloe was discussing earlier, you know, we need to start thinking about Brexit scenarios. We've also had our own research team in the council working on economic recovery, and they have a slightly different view of the data. So we're beginning to bring in lots of different data sets, not just into the economic recovery, but actually across all of our recovery work. And we'll certainly, when that comes back in September, we'll have an all-round view, not to dismiss this report, which is very helpful in many ways, but to say it is coming from a particular lens, and we should look through a variety of lenses to form our own opinion on where we're going.
I think that's an excellent answer. Thank you very much for that. Can I just check there's no other hands raised? Any other questions needed or requested, please, on the COVID report? Okay, thank you very much then. Well, we're asked to note the contents of the report, and I think we can say that that's duly noted at this point. Thank you very much, Chloe and Amanda. We're going to move on to item 6. Please forgive me. We've got a couple of, I think we've got a couple of guests in the meeting room today, which I maybe could have highlighted earlier. But as we can see, all members, if we're on, what do they call it, generic view, so that we can see everybody. There's quite a number of people in the room. So I'm going to pass over to I've just got a note to say before we get into the item. Would members please note that the following report on the multi-class credit fund manager selection contains commercially confidential appendices. For the sake of transparency, it would be very helpful if this item could be held in public session. And I would therefore request that members do not refer to the specifics of anything in those confidential appendices. If it becomes necessary and unavoidable, then we will we'll have to move the meeting into a confidential session, which means a transfer to Teams, which may take a little while to set up. And this time last month, moving to Teams was an awful lot of fun. So I'll leave that with everybody at the moment. Okay, so can I invite the Commercial Transformation Manager, Daniel Sage, please, to introduce this report? I think you're still on mute, Dan.
Yeah, I'm just clicking that off. Hopefully you can hear me now. Yes, so thanks for that introduction. We do have Charlie Sheridan and Stephen Graham from Reddington with us today just to answer any specific questions that you may have on this particular matter. So the paper presented today follows the decision in January to make a 20 million investment into the multi-class credit fund. And we're now really reaching the very final step in this process. Now, a paper was presented to an investment group back in June, following the COVID-19 pandemic, just because there was a lot of volatility happening in the market at the time, and we felt that it was significant enough to make sure that this investment was still aligned to our strategic goals. And we decided at that point that yes, it is still aligned to our goals, which is diversifying our source of commercial income. So at the moment, it's heavily lent towards commercial property, and this is a way of diversifying this. It's adding liquidity to our portfolio. So the recommendation here is it has daily liquidity, which means we can be far more flexible now with some of the investments that we're making. And of course, it's increasing the yield and returns as well. So trying to make more from the money that we have. So following the decision investment group to proceed with this, we instructed Reddington to use their expertise and their vast team of researchers really to find a suitable fund manager that was as closely aligned to our priorities as possible. And these priorities were to find a fund that would yield between 3 to 5%, have a really strong level of ESG, and a fund that would hold UCITS status. Now, UCITS status being the most appropriate fund structure to give access to the multi-class credit funds that would then allow us to use treasury management powers. So just looking at the confidential appendix, you'll see a table of the final fund managers that got through to the final shortlist. We're recommending in this paper that that the fund one goes forward for approval. And we feel that this is the most suitable because it's managed by a team of experienced investment managers with 25 billion assets and 1 billion in global multi-class strategies, which is of course the strategy we're looking at here. It's got the highest level of ESG of those that we've looked at, and it has attractive income closely matched to our investment objectives. Now, the income from this is lower than is at the lower scale of what we were expecting, but I think this is reflected in the lower volatility of this particular fund. And I would just also mention at this point the second recommendation, which is that we agreed to use the expertise of the fund manager to inform any staggering investment. So staggering investment is a way of reducing exposure to unexpected volatility. But of course, whilst we can stagger investments to try to do this, it could have an impact on returns. But overall, we feel that the best approach for us with this is to rely on the fund manager's expertise and intelligence to decide when is the best point for us to enter the market. So I'm happy to take any questions, Chair.
Okay, thank you very much for that, Dan. At the risk of stealing a comment that was made by somebody on this earlier, I'm glad you described what you meant by staggering. because I felt that could be somebody could be falling over, or it could be an amazingly huge thing. So I wanted to be absolutely sure that you weren't referring to it as falling over. So I'm glad you described that. We had that conversation. Right, we've got a couple of questions. If anybody's got any questions on the matter, please raise your hand now. So first up, we've got Councillor McDonald. Peter, please.
Yes, thank you, Chair. Dan, I was, without going into detail on the appendices, a couple of things. First of all, I was pleased to hear you talking about a phased, a staggered, staged approach. I mean, clearly timing is everything. And I realise this is an extremely difficult balance at the moment, but to enter any investment too quickly, too hastily, with too much expectation is a risk. Just maybe comment on the staging factor and the timing. And then the second question I had, looking at Fund 1 and Fund 3, I noticed that Fund 3 is domiciled in Ireland. Will this be a feature going forward, do you think, that we'll be looking at EU domiciled funds to have the maximum flexibility?
Okay, thank you. So just to take your first question, yes, so the staggering investment will be using the intelligence from the fund managers. They'll be looking at various indices around things like credit spreads to try to get an understanding of when we think is the best time to enter the market. But of course, because they're the fund manager that's worked in this sector for quite some time, they're really well positioned to look at that evidence and say, yeah, this seems to us a point that would be appropriate for you. But of course, the thing is when they approach us with that, there will be, with any kind of volatility brings opportunities as well. So there's a lot of stuff to be considered around this. So I think that we're looking at making this investment in August. And I think, in financial market terms, even that is quite a long amount of time. Things could change since then. So I think it does make perfect sense to use that fund manager. But the intention really is to ensure that we have the full 20 million spent by the end of March 2021. Because I think it's just important that we actually make those investments this financial year. And ideally make those investments as soon as possible, really, rather than holding on unless the fund manager, strongly suggests that we do. Just in terms of the Fund 3, so I should just point out that the recommendation we have is domiciled in the UK, and that means that there isn't any currency changes at all. In terms of whether this is something we might see more of, I might just see if Stephen, who's on the call, might be willing to answer that. Stephen?
Yes, thank you, Dan, and thank you for the time today. Look, it's a very difficult question to actually answer. Obviously, there's Brexit occurring.
Stephen, sorry, can I just cut in? It's Mark, the chair here. My apologies, Stephen. Would you just be kind enough, for the sake of both the live video and everybody in the room, just literally a quick introduction of yourself? And I think we've got Charlie online as well, haven't we?
Yes, we have. I will introduce myself, and Charlie can introduce himself immediately afterwards, and then we'll delve into the question.
I appreciate that. Thank you.
So my name is Stephen Graham. I'm a consultant that's been leading on this project with Charlie Sheridan. I have over 20 years of investment management experience. I have actually been a fund manager and a fiduciary, and I have been responsible for guiding and assisting large pension schemes in the UK, Europe and overseas, and also including some sovereign wealth funds.
Sure, thank you for the time, Councillor Gobsack. My name is Charlie Sheridan. I joined Reddington about 2 years ago now, and I support Stephen and also Tara Gillespie in the delivery of our services to Cambridgeshire.
Thank you. Now back to you, Steve, in terms of answering the question. Sorry, but I thought it was important for anybody that's watching on because, yeah, okay, carry on.
Yeah, thank you, Chairman. Look, it's a very difficult question to actually answer in terms of the domicility of where future products may lie. Clearly, when funds were originally created, it was one in the United European Union, and there was passporting for those funds to different jurisdictions. It's very difficult to predict what may happen in the future. Obviously, Fund 3 is based elsewhere, Fund 1 is in the UK. And therefore, whilst it is a worry or a concern as to what may happen in Brexit, we're somewhat insulated in this instance in terms of the recommendation.
Okay, thank you. Peter, did you want to come back on that at all, or are you okay?
No, I think it's fine, Chair. I mean, I suspect it's going to be a recurring theme, but I expect it's very difficult for Steve and his colleagues and Dan to give a definitive answer, and that's not my expectation at the moment.
Okay, thanks, Peter. Right, Councillor Jones, Linda, please.
Thank you. And I fully understand and would support the approach, which is about staggering investment and moving very carefully. I have had a little exchange with Daniel already about paragraph 5.1, which does concern me, not least because it's not just semantics, it's actually logically impossible to avoid exposure to unforeseeable future events. And I don't see that any fund should be judged on its inability to avoid exposure to unforeseeable future events. I think a fund can try and reduce its exposure, and I think a fund could try and minimize it, but avoidance is impossible. And I feel that having that phrase in there and continuing to have it in after we had the discussion just seems to me logically absurd. I'd like it changed to reduce, because that gives some hope to a chance of success, both for the fund manager and for the investments.
I fear we're probably arguing over stuff that is beyond my good self, Linda, in terms of the use of the English language here. But I do tend to see what you're saying. The fact that they are unforeseeable, we don't know they're going to happen. I think that's roughly what you're saying. Okay, all right.
I mean, it isn't just a semantic point. It is actually quite an important point, because we are going to be judging our investments and the fund manager on the ability to do these things. And if we're setting them up to fail in this way, that doesn't seem to me very sensible.
Okay.
So if I can just mention that, yes, I did take into consideration what you said at the briefing session. I did amend the wording of the recommendation that did use the term avoid, because I do agree with that point. I didn't spot that it was in there in the bottom, and I think that the main point here is that the recommendation is recognising that it's minimising the risk to exposure, because I agree that that's the way that we need to approach it. That it is around minimising the exposure.
Okay, let's move on. Thank you, Linda. Councillor Shellens, Mike, please.
Thank you, Chairman. Am I heard?
Absolutely, the fastest take up. Well done.
I got there eventually. I've got a number of points. To start with the semantics area that Linda just totted into. Recommendation B says we want to minimise and we want to maximise. Which is it? So that's the first point. You cannot have two contradictory objectives. I think that March 21 is going to be a very short time for the implications of Brexit to emerge, and I would have thought there should be some merit in considering relaxation of that. As regards the money, do we roll up with a wheelbarrow full of used fivers and hand it all over on day one, or do we take the money down as and when? And if so, what's the impact on returns? If we hand it all over at day one, then what return do we get if they just sit on the money? And the yield, 3 to 5%, is that net of costs? Thank you, Chairman.
There you go, Dan. There's a few questions for you.
Yeah. Okay. Thank you. So I think the first one was on the fund manager. I think around saying whether it should be extended beyond 2021. I think again this comes down to the staggering investment going beyond March 2021. I think this really depends on the fund manager. So I think, and again I'll let Stephen and Charlie step in as well, but it's about avoiding any unexpected, or not avoiding, reducing, minimizing unexpected exposure to the market. Now, the way to do that is just to stagger it over a period of months. I don't think, unless we saw extreme volatility happening, that it would go beyond 2021. But I think that, again, this is all information that we would get from the fund manager. I think that we need to keep our options open, but we do need to recognise that obviously if we hold on to our money and we don't invest, then that will definitely impact on returns. So it's very difficult to know exactly when the time is right to enter the market, and sometimes you've just got to look at the data and say, yeah, we're gonna step in. And I think that it's the easiest thing to do is not put the money in and kind of wait around for the right time. I think we need to use the intelligence from the fund manager.
I understand that, and hang on a sec, and I sympathise with the point, but my concern is that we're setting them an arbitrary target, and I'm not suggesting that we try and second guess the market. That's for them to do, but I think that giving them an arbitrary target can be unhelpful. If I was sat here with 20 million to invest, I wouldn't want to know that I've got to do it by 2 weeks come Thursday.
Okay, at that point, Dan, with permission, if I can bring Steve in, who's raising his hand to comment, that may be of use. Steve.
Look, thank you for the opportunity. The recommendation is to invest in a pooled investment fund. A pooled investment fund being a collective where there are other investors in there.
Can't hear.
I think
I need to speak up, Chairman.
Can you hear me better now?
Yes.
Yes. Okay. I speak more loudly, so apologies there. So I think the first point is you're going to be investing in a pooled fund, or sometimes known as a collective investment vehicle. That is where you're investing alongside other investors, and the manager is managing that fund and that strategy on a day-to-day basis. Therefore, the manager is following the investment policy that it's set and the investment guidelines it's set, and is always actually invested. The key point about a pooled fund, in particular UCITS, it's open-ended, which means that you can come in and out with a greater degree of reliability than other structures. So to answer one of the questions that you had, the staggering of the investment, I think where the Treasury and Dan were coming from is that when you deploy the capital, it's sometimes better just to do so over a number of weeks or a couple of months, just in terms of what may or may not impact that particular day or that particular circumstance or that particular policy day. So it's just prudent risk management. I suppose the second question relating to that, because it's a pooled open-ended fund, no, you don't turn up with a wheelbarrow of fivers. You complete a subscription document, which I'm assuming will be done by someone like Tom. The subscription agreement will then, and the clearing of that money normally takes a couple of days, and you have your investment in place. And the third question, in terms of the fund manager's input, the fund manager is obviously providing commentary as to their views of the market. The fund manager is providing information as to how they're performing and where they may see investment opportunities. The timing of that subscription agreement obviously rests with the council in terms of that piece of timing. We're available, Treasury is available, and of course Dan is available in terms of those type of discussions.
Okay, thanks for that, Steve. Chloe, I've got you wanting to come in. I'm assuming you want to come in.
Sorry, Chairman, I've got a couple of follow-ups, if I may.
Yeah,
First of all,
sorry, Mike, before you go into follow-ups, I think Chloe wants to come in to add to that, which may affect your follow-ups.
Splendid.
Okay, is that correct, Chloe?
Hopefully. So on the point, the initial point about post-Brexit, we don't know what's going to go on and whether the end of March is a viable date. Following on what Stephen was saying, the whole point of this, and one of the reasons why we went into this kind of fund, is for the daily liquidity. So the net asset value is updated daily. If we find as we're approaching Brexit and post-Brexit, it's not for us anymore, we can make a decision very, very quickly. However, some of the discussions we have had with our colleagues in Readington to test some theory around Brexit has been the UK, whatever it's going to turn into post-Brexit for, UCITS is a European term, but we're expecting a UK version of it. And it is so widely used and widely embedded in lots of pension funds and the like, which obviously there'll be a long consultation. So we would hope any kind of immediate impact of Brexit would be felt over a longer term rather than straight away kind of in January time. But certainly we have been keen to have that daily liquidity. And so I'd hope that would help any decision we need to make around that time.
Okay, so what I'd like to do is go back to you, Mike, to see if
Thank you, Chairman.
Now, and then David, I still recognise your hand is raised as well.
Right. My only point regarding the 31st of March is not that I just don't want to straitjacket the poor devils who are trying to make their best endeavours by saying you have to have used up the 20 million or whatever it is by then. I just like them to have a little more wriggle room in terms of when they decide to invest. That's point one. Point two, I haven't heard a comment on minimise or maximise. And thirdly, just if someone could, any time we have another document like this, spell out what UCITS actually stands for, because I don't know, and B, I don't think it's helpful for people in the wider world to have acronyms like that. Thank you.
Okay, Dan, could I just ask you, what Councillor Shallons is referring to is to point B in the recommendations, the use of maximise return and minimise on risk. Could you just qualify that, please?
Yeah, so what I'm referring to there is that through the staggering of the investment, that we want to try and make it as likely as possible that we're going to maximise returns. And by that, I mean that if we can time our investment at the right point, that means that we can try to maximise returns where possible. But at the same time, we need to minimise risk. And I know there is always a balance, because obviously by maximising returns, you do obviously end up taking risk in order to get there. But what we're saying here is that we're trying to seek that balance of trying to maximise returns whilst also keeping the security of the fund at the forefront of our decisions. And again, this is all going to be the information that we're going to be seeking from the fund manager. So it's really about establishing that balance.
I entirely understand that, but just in terms of logic, you cannot have an objective with two contradictory absolute primary objectives. Therefore, I suggest that you just modify the English.
Okay. Could we just not add the word in after investment in, where it says agree to the use of the expertise of the fund manager to inform a profile of the investment into a balance of to maximise the return and to minimise the exposure. That's surely all we need on there, isn't it? Well, would you be happy with that, Mike?
Delirious, Chairman.
Okay, I can't see anything major. I think it's just again a wording of English change, not an actual fundamental change in what we're trying to do.
Agreed.
Now, Steve or Charlie, were you trying to come back in on this?
Yes, thank you, Councillor. When we prepared the documents, we provided a glossary of definitions. I appreciate for this particular forum, it's probably not readily available, but just to kind of clarify, UCITS is the undertaking for collective investments in transferable securities, just as the question was asked.
Okay, thank you for that. Thank you very much. Right, we're going to move on to David. Councillor Jenkins, please.
Yes, thank you, Chair. I find the decision-making implied in this paper somewhat less than compelling. In 3.9, we're told about the shortlist that Readington had come up with, which was 4 firms. And then suddenly we go into 2 firms without any explanation as to why we might have dropped 2 of them. And then we go into funds 1 and 3 and major on fund 1 in point 4.2 and saying why they'd be a good choice without any serious comparison of fund 3 until we get to 4.5, in which it seems to be a case of what Mike to some extent has been labouring on. Fund 1 we've imposed gives us high level of ESG, but apparently inferior returns. Fund 3, less strong, but still strong ESG integration, but better returns. But we're going to take Fund 1. I don't see the compelling logic that takes me down from 4 funds to 2 funds to the 1 fund. You know, we're taking this decision in public, and we should have the logic in public, and I don't see it there.
Chair, may I interrupt there? I believe the argument is in the appendix, is it not?
Yes.
Did you hear that?
Yes, I did. The answers are in the appendix. That's what I thought.
Yes.
The public only sees the public document.
Well, then we'd have to go into confidential session if you want the answers to be laid before you here, David.
I mean, somewhere or another, someone's got to tell me why are we going for 1.
Well, David, there was a meeting on Tuesday, which of the investment fund, the sub fund, where it was clearly explained. And I thought you were a member of that.
No, Peter's there. So we're going for 1, even though it has inferior returns.
I think the question is, if I may, Chairman, does the public need to have an understanding of why we go 4-2-1? If so, then it is not visible. If we're saying the public don't need to know, then we have the document that we have in front of us.
Yeah, okay, I take that point, Mike. I'd just like to go back on a point you just said there, David, and that is, look, one of the major factors in this was the level of ESG, and you know, the fund choice, the fund to go ahead in here was the best on ESG, which was a major factor all the way through on this, which has been discussed at the investment meetings and everything. So it's not just a straightforward, we're going for the one with the worst returns. No, obviously it's not a race to the bottom, is it?
I fully understand this, Chair, and well said, but then we need to articulate that in the paper. The public needs to see on the basis upon which we're making our decision.
Okay. Terry, you've still got your hand up. Do you want to come back in on this?
Sorry, no, I forgot to lower.
Okay, no problem. Right, we've got I think that's probably Steve and Chloe. So let's go to Steve first. Do you want to come back in on this?
Yes, just thank you, Councillor. I'm accepting the points that were discussed. Just remember, when we're looking at historical performance numbers, they are a reflection of the past, and it's a future investment that you're looking to make. I'd also stress that this is a longer term investment in which there has been a significant sea change in terms of the public's consciousness to the importance of ESG for personal well-being and the community's well-being. And we're starting to see some of those factors play out in the investment markets where investors are searching for investments that do have high ESG credentials and wanting to drop those that don't. So what you find, certainly at the moment, is things that have fossil fuels do yield a higher return, quite correctly, but they don't have the same ESG credentials. So that just to bring to the discussion that had occurred. So of the 4, the fund that was highlighted was one that better met the requirements that we understood, and the ESG criteria was one of the key ones. Thank you.
Okay, thank you.
With respect, Chairman, what we've just had articulated is the answer to the wrong question. The question that's been answered is, why did you do this? David's question is, why aren't we telling the public?
Okay, Mike, we'll come back to that if I can. Chloe, if I can bring you in, please.
Yes, thank you, Chair. Just on that note, I think we're just going to add in a paragraph here that says, actually, based on the ESG and based on our requirements and the fact that we wanted to exclude fossil fuels, there was only one fund, and that fund is Fund 1. So I think we can make that very clear if that's how that decision was made, that because of that we agree collectively what our ESG approach was, it has led us to Fund 1. We have mentioned Fund 3 as a comparator, but that would mean about loosening some of our ESG requirements. So we can add a paragraph in, because I think you're right. The public just need to know we've gone from 4 to 1, essentially based on the requirements that we put in at the beginning.
All right, I think that's a really helpful.
Yeah, very helpful, Chairman.
Very helpful there, Chloe. But let me be absolutely clear here. We need to add that paragraph in before we vote on it. So we need to have that paragraph in now.
Consider it in.
Unless, if you can fire from the hip with it, we could go with and everybody's agreed, we can put a vote on it. But I'd already agreed that in part B that we were going to add the word a balance between the maximised return and minimise, which I thought was a fair challenge. But how can we? I'm putting you on the spot here, and you're live on YouTube as well, Chloe. But is this something you feel that you and Dan can do?
Yes, absolutely. I think that we need to put in. I'm trying to find a appropriate place within the. Probably it'll be a 4.2, and then the rest of 4.2 comes down that of the 4 managers, only 1 met all of our requirements, including ESG. Therefore, we are recommending Fund 1 going forward. Is that okay?
I think that needs to actually be added into our recommendations that we're voting on, and I think that's the point. Is that not right?
Okay, that can go into recommendation.
Just an addendum, to A. Really,
you tack it on at the end of A,
yeah. And I think we're quite happy with that then.
Mark, Councillor, could I just suggest on recommendation B that actually the logic in the paper is about the timing of the investment, and I think if you added to B to inform the profile and timing of the investment into the fund, that would enable maximising return and minimising risk exposure to be made sense of. I think it's just that the recommendation B isn't sort of quite fully worked through.
As opposed to my use of the word balance, Linda, I think that works better.
And I think what we've been talking about all the way through is the staggering.
Okay.
And staggering has been about trying to reduce our risk exposure whilst maximising our return. That is the balance. But in terms of just adding, a word or two to B, I think if you explicitly put timing in, that would do it. Anyway, it's just a.
I'm okay with that on B. Chloe, sorry to do this to you, but could you now read out, because Democratic Services will need this, could you now read out what proposal A needs to be that we're going to go to the vote on, please?
Okay, so proposal A will be committee asks to agree the appointment of Fund 1, as Fund 1 is the only one that meets our full ESG requirements, as being shortlisted and recommended by CNI Investment Group and our investment advisors. Is that okay?
Okay, right. So with that in mind, Dan, did you get that?
Yes, yes.
Right. Could I please ask you, Dan, to read the recommendations A and B, which I intend to take together. Once we've read that, I'll then take a quick surmise as to whether we need to go to the vote or whether we're actually all in agreement here.
Can I just clarify recommendation B, following Councillor Jones?
Just to add, to inform the profile and timing of the investment into the fund. That's all. Just
okay with that.
Okay, so recommendation A, committee are asked to agree the appointment of Fund 1 as being the only fund that met all of the full ESG requirements. Hang on, sorry, I've lost my cursor. Committee are asked to agree the appointment of Fund 1 as the only fund that met the full ESG requirements of the sorry, I've missed my typing. I've managed to delete part of it. Sorry. Chloe, can you read it again?
Sorry, everybody. Chloe, can you read it again, or do you want me to have a go?
All right, I was taking after Councillor Shellings and couldn't find my mute button. Committee are asked to agree to the appointment of Fund 1. Fund 1 is the only one that met our full ESG requirements and are recommended by CNI Investment Group and our investment advisors.
Okay, I'm happy with that. And then B should now read, agree to the use of the expertise of the fund manager to inform the profile and timing of the investment into the fund to maximise the return whilst minimising the risk of exposure. Okay. Well, just by raising the hand on the right-hand side, is there anybody that's looking to not vote in favour of these? And in that case, we can avoid the big voting exercise, and we can take that through. So that was unanimously in favour, and you can make a note of that accordingly, Dan. Is that okay?
That's fine, Chair. Thank you. I got that now.
Okay. Thank you, everybody. Thanks for that. And that was good debate. It may have gone on a little bit longer than we wanted, but that was a good debate, I felt. Thank you. And thank you to both Chloe and Dan and our two guests on that. That was very useful. Okay, we're going to move on to item 7, which is the Alconbury Weald Civic Hub. And I'm going to pass over for this to Andy Preston, please, to introduce the report. Morning, Andy.
Good morning. Thank you, Chairman. Okay, so Andy Preston, I'm the Senior Lead for the Civic Hub element of the CAMHS 2020 programme. The report that you have before you this morning provides an update on the impacts of COVID-19 on the construction of the Civic Hub at Alconbury Weald. As you are aware, the project started construction in December of 2019, and good progress was made from that point up until the March of 2020 with the completion of the structural steel frame and the foundations, all to programme without any delay, which was fantastic news. Unfortunately, as you're aware, the COVID-19 pandemic struck in late March, and that introduced some significant restrictions, lockdown restrictions countrywide, which gave government powers to close down various aspects across the country. However, it did not close down construction sites or require the close down of construction sites. The introduction of 2 metre social distancing requirements or recommended requirement was introduced, and national construction site operating procedures were then introduced by the Construction Leadership Council that were required to be implemented on construction sites to enable them to continue safely and protect the workforce and spread of infection on those sites and any interaction with the public. So due to the stages of construction of the Civic Hub, these were able to be implemented, and they were implemented successfully due to the space available on the site for the work to be able to continue. And our contractor, RG Carter, were able to therefore continue the construction with various iterations of that national guidance as it was amended. However, the challenge has really been with subcontract organisations, particularly around the supply of labour and materials, which has been very variable during the lockdown period. The particular challenge was with the metal decking for the first floor and the roof and the concrete flooring of the ground floor. And those supply chain partners unfortunately closed down completely during the initial 6-week period of the lockdown. And therefore that gave our contractors some significant challenges in being able to progress in accordance with the programme. There has also been more recently some challenges with the curtain walling installation and the glazing, due to the manufacturers also closing down during the lockdown period in terms of the manufacture of that supply of those materials. But at present, the contractor is reporting a 7-week delay to the contract completion date. The build still scheduled to complete in the spring, potentially later in the spring at this stage. But the contractor is working very hard to try and claw back some of that lost time by changing methods of working, looking at how the project could be constructed more quickly to bring back some of those delays. 2.1.4 highlights what that 7-week delay equates to from a financial implication, which is approximately 125,000 at this stage, based on that 7-week delay. And as I've said, the team are constantly working to look at mitigation strategies, risk review meetings to try and reduce the impact that COVID-19 continues to have on the project. As I'm sure you'll appreciate, the risk register for this scheme didn't include the possibility of a worldwide pandemic. So there wasn't an allowance within the existing risk register and risk contingency, therefore, for this particular risk to occur. And as I've said, this risk still remains live. It has the potential to have an impact on productivity as we move forward. But as I said, the contractor is working hard to reduce any impact. Based on this live risk that remains, we feel that there's necessity to introduce a specific COVID-19 risk budget allocation allowance to ensure that the budget allows for any further impact of the pandemic on the project, but we're hoping to minimise and mitigate that clearly. The proposal is to introduce a 400,000 risk budget contingency, of which 125 is assumed to have been used to date. In terms of the general update on the project, as you're aware, the building was planned to accommodate 350 desks, but obviously we are in a very different position at the moment with regard to COVID-19. We are therefore taking the opportunity to review the building from a COVID-19 perspective in light of those measures. And the opportunity is obviously taken at the right time with this building and able to introduce those and look at how the council will utilise this building operationally when it comes is commissioned next year. You will also recall that this committee, when it met in December 2019, were very keen to see the gas supply removed from the building. And you will see that that has now been able to take place. That has required an additional cost of 161,000 to achieve that, and that was through the introduction of an air source heat pump located within the car park.
Andy, could I just, apologies for doing this, could I just stop you for 1 second, please? Terry, are you raising a concern? I know you're going to have to leave us very shortly, but you...
I have to leave. I'd just like to raise two issues, if I may, Andy, which perhaps your answer to the rest of the committee. One, I thought we set aside a contingency initially of 400,000. I couldn't see that in the paper. And the second one is with regard to COVID-19 and a hot city or hot desks policy with 600 staff. I would question that figure. I do apologise. I must go now, Chair. And
okay, well, we will answer those and they'll be recorded, Terry. But thank you for your time this morning. Okay.
Sorry about to leave.
Okay, sorry about that, Andy, but I knew that was time pressing for Councillor Rogers. So if I haven't cut you off in your flow, if you can continue, I'll be very grateful. Then we'll come back to those questions.
No, okay, no problem. So yes, the gas supply has been removed. In terms of the cost update, just even with the 125,000 impact, the budget still remains intact at 18.337 million at this stage, with a spend to date of just over 5 million. You'll see in the budget breakdown there that Councillor Rogers there was referring to the risk allowance. There was an £863,000 risk allowance prior to the start of construction. And you'll see there that is with various risks that have occurred, of which they are broken down. Below that has reduced to 437. So there is a remaining general risk allowance of 437. And you will see in the appendix that there are still some risks other than COVID-19 that occur, that there must also be a general risk allowance for this project. The COVID risk is proposed to be additional and separate, very separate to that. And there is a very small employees change contingency remaining also. And you see the breakdown in 2.4.1. In terms of social value, just an update on social value. You'll recall that there was an agreed KPI with regard to supply chain and use within 50 miles of radius of the site, and the target was 70%. And I'm pleased to report that the first 9.8 million of orders has achieved 76% within 50 miles radius of the site. So that is good news. In terms of the vacation of Shire Hall, clearly COVID-19 has had a broad impact on many areas and sectors, and that has also affected the work that is underway for the sale of Shire Hall and for the developer to take on and that acquisition. But we are working very closely with the developer to ensure that the two projects are coordinated as we move forward in the coming months. I think that concludes my introduction, Chairman.
Okay, thank you very much, Andy. Well, we've got the questions that I didn't quickly write down quick enough when Terry left us, but he raised a couple of points there. Did you capture them, and can you answer those first before we go to any others?
Yes, I think the first point was around the risk contingency of 400,000 at the start. That's actually 863,000 prior to start of construction, which is obviously reduced to the 437 with various risks that have occurred. In terms of the 2-to-1 ratio, I think the fact that my comment that we are reviewing how the building will operate going forward, and that's something we're looking at the moment. So we're not expecting at this stage necessarily, depending on where things progress with COVID-19, but I think the likelihood of a 2-to-1 death ratio and 350 officers in that building potentially when it comes into commission is not likely to be the case, but we are reviewing that, and that's been looked at obviously corporately as well, how the authority will utilise its buildings in light of COVID-19.
Thank you, Andrew. Thank you very much. Any other questions? Raise your hands, please. I'm not seeing any other questions. So there seems to be, unless I'm mistaken here, a general consensus in support of the recommendations. So I propose to take it now. If anybody disagrees with this, please just raise your hand in the raised hand function. Councillor Jones, is this the group position?
Yes, I'm going to abstain because the group decision was, as you know, not to move out of Cambridge in the first place, not to move out of Shire Hall. So
okay,
I cannot vote for this.
That's fine, I respect that. And in that case, we will go to a listed vote, and I will call your name out and ask you to vote. So the report recommendations that we note that we note construction progress and development to date, which remains within the approved budget. B, note the current additional cost of 125k and a delay of 7 weeks resulting from the COVID-19 pandemic and potential for further impacts which were not allowed for when setting the current risk contingency budget. And C, support the recommendation provision of a separate specific 400k COVID-19 risk contingency budget to GPC, General Purposes Committee, funded by Prudential Borrowing. I'm going to come to you in terms, and I won't miss you out this time. Councillor Ian Bates.
Support.
Councillor Chris Bowden.
Agreed.
I think that was agreed, Chris, yes? Okay,
yes.
Councillor
Yes,
John
agreed.
Gowan.
Agreed.
Councillor David Jenkins.
Agreed.
Councillor Linda Jones.
Abstain.
Councillor Peter MacDonald.
Agreed.
Councillor Terry Rogers. Well, he's no longer here, so we can't count that vote. Councillor Mike Shellings.
Agreed.
Councillor Tim Wotherspoon.
Agreed.
And myself, Councillor Mark Goldsack, is agreed. I think that's quite straightforward with one abstention that is carried. Thank you very much. We will now rapidly move on to number 8, which is an update on the options for Hinchinbrook Country Park. Tony Cooper is going to introduce the report. Tony is the Assistant Director of our property. Over to you, Tony. Thank you.
Thank you very much, Chair, and hello to the committee. This is an update on a paper that came to the committee back in May 2019 regarding options for the future of Hinchinbrook Country Park. I think 4 options were put forward, and the committee asked that two of those options were taken forward for consideration. The 2 options were for a new 99-year lease to Huntingdonshire for the country park, with a proviso that any surpluses generated from the operation of the park would be reinvested in country parks within that district. The second option was to look at the possibility of taking the park back in hand at the end of the current lease, which is in 2026, with a view to the county council operating the park itself through another operator or provider. We've worked with Huntingdonshire to look at these options, and Huntingdonshire have looked at their own business case in detail, and themselves would like to proceed with the 99-year lease. They've prepared a business case and shared the outline business case with us, but have not been willing to share the detailed business case on grounds of commercial confidentiality. Their key proposals are to increase the parking on site to facilitate an increase in revenue, because they currently operate the park with a deficit in the region of about £100,000 a year, offset by parking income. And their core business case is that by increasing the parking provision to increase revenue and also support the use of the park for larger events and facilitate those, will help them to reduce that deficit. And as mentioned, should this generate a surplus, this would be required to be reinvested in country parks in the district. The second option is to look at whether the county council could run this itself through another operator has also been considered. A number of evaluations were taken on, including looking at the operation of Milton Country Park, which currently does not generate any significant surplus despite considerable investment and time, and operates pretty much to a break-even position. We've also looked at the finances around Neen Park near Peterborough, which is quite an extensive country park operation and has a variety of events and facilities that are provided. And again, that operates pretty much around a break-even position. I think its target for the current financial year is to generate a surplus of £1,000 off a six-figure turnover. So our conclusion is that country park operations at the present time do not offer much in the way of an opportunity of generating revenue and are likely to cost the county council money to operate, whether that's run in-house or through another operator. So we, in the current financial position, do not think it an appropriate route to go down. So on the basis of having considered those options, our recommendation is to proceed with negotiations for a 99-year lease to Huntingdonshire for them to operate the park. I would stress that the lease will follow the form of the current lease, which will restrict development on the site, and therefore should Huntingdonshire wish to expand buildings or other forms of development to perhaps enhance operations or revenues, they will need to return to the county council for consent to do that, and we can look at the business and financial implications of those at that time. But the current proposals are primarily to increase the parking to offset the operating costs, which in our view is a reasonable approach. So as I say, on that basis, our recommendation is to go forward with the lease to Huntingdonshire. So I can refer back to you, Chair, for any questions.
Okay, thank you, Tony. If I can come to questions in a little while, because we've got a number of speakers on this, if I can. Councillor Downs, I recognise you wish to speak as a local member. I don't know whether I think you did get the email, but we didn't get a response back from you with a view, but I will allow it. But I'm going to go first, if I can, with three speakers here. We've got Councillor Sanderson, I apologise, Councillor Sanderson, Councillor Buteau, and then Councillor Downs. So Tom, over to you first, please.
Thank you very much, Mr. Chairman. Don't worry, I've been called a lot worse, as you can probably imagine. Really, I think my interest in this purely is as a local member. Just for full disclosure, I'm also a member of the District Council, but obviously Councillor Buteau will speak from that perspective. I think improvements to the park are urgently required. It's been a long time since we really had any significant investment, particularly regarding the car parking. I regularly get complaints from local residents because the car park is full, which I take as a good sign. Good to see the park being used, but of course it means that parking is spilling over into residential areas, which is obviously causing a headache for people there. And this is something I know the two authorities have been talking about for some years, and I'm delighted that we appear to have found a way forward, and we'll be able to grant the District Council a long-term lease, which will allow them to carry out the investment that they want to see in the park. As you correctly said, it doesn't generate a great deal of income, and I think that's inevitable, but it is a very valuable green space, which is very important to the district and very important to the local community. So I would urge all colleagues on the panel to go ahead with the officer recommendation. Thank you.
Thank you very much, Tom. Thanks for that. Councillor Marge Buteau, welcome to our meeting, and you're most welcome. So it's over to yourself for your turn to speak, please.
Good morning. Thank you. My name is Marge Buteau, and I am the portfolio holder leading operational services and environmental matters for Huntingdonshire. The coronavirus pandemic has shown us that country parks and open spaces are vitally important for the well-being, both mentally and physically, of all of our residents. We have operated the park for 24 years and have shown true commitment to supporting the operating costs, which have saved the County Council several millions over the years. In addition, we have achieved green flag status, retained country park status, as well as several other awards recognising biodiversity and visitor satisfaction. Huntingdonshire District Council has committed to investing in the highly valued parks and open spaces in Huntingdonshire as part of the recovery from the pandemic. The benefits document that we have produced clearly states our vision for a professionally managed and sustainable park that encourages both physical activity and volunteering, as well as a valued and protected natural asset for nature. Hinchinbrook Country Park is so vital to Huntingdon because it is 88% of the public parks and gardens available for local use. The financial benefits to the community and health and well-being services are also shown in the benefits document. The economic value of a well-run Hinchinbrook Country Park is over £700,000 per year. The health benefits and for the park are in excess of £12 million a year. This park needs to be well run. It needs secure financial investment to ensure future sustainability for both people and nature. The country park is for our residents, but also for our future generations. And I'm delighted as the portfolio holder for operations and the environment to be able to confirm that the District Council is able to invest up to £1.5 million following a positive decision of this meeting today, securing the future legacy of the park. This investment will take place over a 2-year period, and the established liaison committee with representation from the County Council will play an important role. I will be delighted to continue to work in conjunction with the County Council to make this happen. Thank you.
Thank you, Councillor Butel. Thank you, and well spoken. And I'll move on now to Councillor Downs. Peter, please.
Yes, thank you. Good morning. I should explain that I've got a great sort of emotional interest in this park because I helped set it up. Actually, I've been around such a long time, but it was set up, as you probably know, in the area quite close to where I used to be headmaster at Hinchinbrook School. So I was very pleased to see it happen, and I've used it many times myself, as it's very near where I live. And I quite agree it is an essential asset for this district, and it needs to be preserved and developed. There are quite a lot of improvements are needed, as previous speakers have said. I have two particular points I want to raise. First, I think Tony Cooper has reassured me that the District Council couldn't do anything unsatisfactory, like selling it off or selling part of it off for planning for housing development without consent. I think that was one of my worries, that they might, not all of it obviously, but part of it, because it is adjacent to housing areas. I just wondered whether they had some scheme in mind to raise a bit of money by selling a bit of it off for housing. And I think I've been reassured by Tony that wouldn't happen without consultation with the County Council. My second point is about long-term responsibility. You are proposing to allocate this responsibility to the District Council for 99 years. I just want to be sure that when the draft is written up, that the responsibility for its maintenance passes to any successor councils which may emerge in the next few years when the District Council and the County Council are abolished and replaced by some other form of council. What I don't want to see is it sold off to a private developer. And I want some reassurance from the legal side that it will be kept in, as it were, in public ownership in whatever council structure there is for all that time. Thank you.
Okay, thank you for that, Dan. Right, members, what I'd like to do, Mike, I recognise you've got your hand up, but if you could just go with me here for a little bit. I want to go back. Has anybody got any questions of the three local councillors and county councillor that just might raise their points? Have we got any questions specific for Councillors Downs, Councillors Butel and Councillor Sanderson? Linda, you've just raised your hand.
Yes, I wanted to ask Councillor Boutel about the car park issue, because I've been to the country park. I realise how near it is to the hospital. I've got a sort of concern that the car park could be endlessly extended, and the income then would be quite significant, but it wouldn't necessarily do any good for the country park or for the local people. But it could bring in a lot of money. So could I be clear about what your intentions are in relation to the car park? Because I presume that the restriction on development isn't actually restricting the expansion of the car park.
Councillor Boutel, sorry.
Yes, I'm here. Thank you very much. Any enlargement of the car park would be subject to planning application, and it would be subject to the requirements at the time. The car park is an issue. Local residents are continually complaining about it. It is something that needs to be addressed, but it will come under local planning regulations.
Thank you. I understand that. I just wondered what the intentions were of the district council, as opposed to, you know, it's about what you put in to go through planning regulations.
I think if I may, Linda, I totally recognise where you're coming from here, but I think what we're looking at here is a 99-year lease from the county council to the district council. I think the detail of what the district council is going to do is still to be finalised, I believe. Although I'm sure they've got plans and everything. The principle here is around the positioning of the lease. So the details, if there's any questions as to what Huntingdonshire District Council want to do, that's really down to them.
Well, I'm sorry, I do understand that, but you know, it might alter how we decide to vote in relation to granting the lease. That was why I was raising the question.
Can I answer that, Chair?
Please have another go, yeah.
At the moment, we have no plans for the car park, if that answers your question.
Well, that was a lovely, quick and perfect answer. Thank you very much. I think I see Linda nodding as well. So thank you for that. Okay, so now we'll go back to questions for Tony Cooper on the actual paper itself. And Mike, you've been very, very patient with your hand up there, sir. So I'll come to you first, please. Councillor Schellings.
Thank you, Chairman. I was perplexed when this issue was not resolved a year ago. It always struck me that the configuration of the park did not lend itself to becoming Butlins on News. I am delighted that we have an agreement here. In the meantime, I took it upon myself to see chief executives of both councils, because I was aware that there can occasionally be friction between the two councils. And I am very pleased that we now have agreement between the two councils on this point, and think it would be very advantageous for all if the good relations on this issue were transferred to a wider spread of issues. End of point.
Okay, thank you. Any other points and questions on the thing? Yeah, Councillor Bates, Ian, please.
Thank you, Mr. Chairman, and thank you for the opportunity to speak. I have a long association with Hinchinbrook Park, as you might imagine. I suspect, along with Councillor Downs, been around for quite a bit. I'm entirely content indeed with the recommendations to adopt B, and I'm happy to propose that, Mr. Chairman.
Thank you very much.
Happy to second, Chairman.
Okay, thank you, Mike. Thank you very much for that. In that case, I think I'm sensing quite a bit of general consensus on this. I don't think there's anybody that's strongly against that. So if I see no objections, we'll take the recommendation and say that is carried. Everybody okay with that? Raise a hand now if there's any dissensions to that. Okay, thank you very much. Thank you very much for joining us today as well, the local members. Always good to add that flavour to a debate. So you're most welcome. Thank you. Right, we're going to move now on to item 9, which is the finance monitoring report. And I believe we've got Strategic Finance Manager Ellie Todd to introduce this, please.
Yes, thank you, Chair. So this is the finance monitoring report for May 2020, and this is the first financial report for this financial year. Looking at the revenue position first on page 98, you will see that we are forecasting an underachievement of income of 1.9 million for this year for CNI. That's mainly as a result of the COVID-19 pressures, which you can see a summary of in the table at the bottom of page 99. These sum to just over 2 million, and they are offset by 175k underspend on Alcobury Hub, and that's due to the forecast kind of opening date of that building being after the end of this financial year now. Therefore, this budget for the kind of operational and maintenance of that building won't be required this year. Moving on to capital on page 100, we're currently forecasting a balance outturn position, which is pretty normal for the first financial report of the year. However, because it is the first report of the year, there are several recommendations in relation to capital budgets to quickly highlight. So the nature of a multi-year capital programme means that when we set the 2021 budget, in reality, we're setting the figures back in kind of December, early January time. And we obviously make assumptions about the 1920 outturn position at that point. Obviously, as we get closer towards that outturn, those assumptions potentially change, and therefore we need to take that into account in the 2021 budget. Those, if there are underspends in 1920, they are not automatically rolled forward. So we ask services to review those underspends in budget, and that is also then sent to Capital Programme Board to review as well. And the impact of that is then shown in that table on page 100, 101, I think. The second area where we make changes, we also then look at additional rephasing that is required for future years, for 2021 and beyond, and potentially looking at where we need to kind of push back some budgets. And this often relates to schemes that are more in their infancy, so early on in development. Obviously, as the business cases are more developed over the few months from December to now, that potentially results in some changes. So you'll see one of the examples of that is the North Angle scheme, where we're looking at moving 20 million of budget back from 2021 to 21-22. The third area of change relates to additional reductions in budget, and you'll see in the second part of the table there are 3 requests for additional budget. The first one relates to building maintenance as a result of condition surveys. An additional 352k is requested in order to complete all the priority 1 areas out of those condition surveys. For Mill Road former library, this committee has seen several reports on that building. We now have an estimate of the costs that are required to undertake the urgent work that is needed on that building. There is a decision about the future use of that building still to be made, but the outcome of that decision doesn't affect the fact that we still need to undertake that urgent work at a cost of 330,000. And the third one is the investment in the CCG assets portfolio, which you received a report on last month. So this doesn't actually need a recommendation, but it's there for completeness. So the result of all these changes mean that there are 3 recommendations on this report. The first is that CNI recommends to GPC to approve the roll forwards and rephasing as set out on page 101. The second one is the additional budget for the building maintenance, and the third is the additional budgets for Mill Road former library. Thank you.
Okay, thanks very much, Ellie. Has anybody got any questions or comments at this stage? Please raise your hand. We have Councillor Bowden. Chris, please.
Thank you very much indeed, Chairman. This may be a question which is more appropriate for GPC, but I'll raise it here just to flag it up. As has just been mentioned, there's just over £2 million on the revenue budget here shown as being effectively lost as a result of COVID-19. Yet central government has already provided some £4.3 billion of support to local authorities, including in its first 2 tranches of £1.6 billion each, monies which weren't specifically allocated for any particular purposes. And we are led to believe that there have to be future batches of central government funding made available to local government, both for the additional costs that have been from COVID-19 and also, according to central government, at least in part, to alleviate some elements of lost income. And my question is, especially when we are not told what the specific grants are that we are receiving from central government, as was the case with the first 2 batches of 1.6 billion, to what extent are these monies coming in from central government being devolved down to individual directorates and therefore into the budget figures that we've got here? Is it planned that we're going to be doing that at all, or are they all going to be kept centrally? And if they are going to be drilled down to directorates, have we yet put any money in from the monies we've received from central government into our budgets here for C&I?
Ellie, I don't know if you want to come back with that, or whether Tom, you're sitting there poised to jump in on that as well. I'll leave it up to whoever, which one of you two wants to come back on that, please.
So I can give a short answer, and Tom might want to expand on it. So initially, we haven't apportioned out those grants that we've been given to individual areas for the moment. That is, so it is going to GPC, showing all of the pressures in the individual areas. I think that is something that as we go forward, we will be looking at and taking under consideration. I don't know, Tom, if you want to add anything to that.
Yeah, I mean, that's absolutely right. There is a bit more detail in Tuesday's GPC agenda. Where we've had ring fence grants, so like track and trace and infection control, they have gone straight to the services that need to deploy it according to conditions. But the unring fence ones are with GPC and haven't been deployed yet. And the most recent announcement that Councillor Bowden refers to about some support for sales fees and charges will be interesting. We need to see more detail on that. But we don't know yet whether that will or will not support the commercial income, which is the main risk to this committee. So we're keeping a watching brief on that.
Okay.
I think, if I may, Chairman, I think this committee also needs to keep a very watching brief on what GPC decides as far as this is concerned.
Absolutely, absolutely. Thank you. Councillor McDonald. Peter, please.
Yeah, thank you, Mark. It's a question not necessarily looking for an answer today, but maybe to consider for the future, given all the uncertainties. Eleanor, for the property investments, if I understand it, you're saying full year cost or impact on reduction in commercial property rent is 970. Do you think it could be much greater than that, or is it too early to say?
So for some of the commercial portfolio, we believe that the rents are actually pretty stable now. We've got a reasonably diversified portfolio, so some of the properties are performing quite well, and we don't expect there to be any change on those. There are two properties where there is potential for it to potentially go either way. It could get slightly better on one of the properties, it could get slightly worse. But obviously we are keeping that under review, and that will be reported back regularly to this committee as we kind of start to firm up some of those assumptions.
Okay, okay with that, Peter. Thank you. Councillor Mike Shellings. Mike, please.
Thank you, Chairman. With reference to the graph in 1.1, where we're showing expenditure, I've always found it helpful to have the previous 12-month figure in a table like that, so that we can see how this year is panning out against last year. And secondly, building maintenance, we have got requests for additional money now because of surveys which have thrown up essential work that needs to be done. Why on earth was no temporary budget put in, no provisional budget put in, so that we don't have a surprise like this in the early part of a year? I mean, inevitably, if we're doing surveys, there will be expenditure. So for heaven's sake, make a stab at it and then adjust it as we go along. But at least we're not caught with total surprise. Thank you, Chairman.
Do you want to come back on those, Ellie?
End of tantrum.
Yeah. I think it comes back to the timing of those condition surveys, again, because as I said, the budget for this year was set back in December time. What we are doing now that we've got those condition surveys is, as well as the priority ones, we also have the priority 2s, priority 3s, and so we are looking at the schedule for those to feed into the 21-22 business planning process, so that we don't have this surprise going forward like you suggest, as it is obviously not helpful.
Okay, thank you very much. Not seeing any more questions, hands being raised. Again, I think I'm feeling a general consensus of support for the recommendations. So I propose to take it now. If anybody disagrees, please use the raised hand function. Okay, so I see no objections, so we will take the recommendations as carried, and thank you for bringing the report today. Thank you. We're now going to move to item 10, which is the committee agenda plan, training plan, and appointments to outside bodies. Daniel, are you prepped up on this?
Yeah, I've got no changes to the agenda plan. That's as published.
Okay. The only thing I was going to say to the committee is the only item that we have on the August committee is the COVID update. I was actually going to propose that we don't have the August meeting unless anything significant rises between now and obviously a week or so before then. If I can see if everybody's in general consensus with that, I think that seems a logical way forward rather than convening just on the on a COVID thing, which, let's face it, from what we said earlier, the figures for that are going to come out as a matter of course when they're available anyway and not be waited for the report anyway. Mike, you'd like to add a point on that, please? Mike
Yeah,
Shelley.
just very quickly, Chairman, in the event that we do have a meeting, could somebody give me a guess as to when?
The meeting was, excuse me 1 second.
14th.
Yes.
That's right, Chair, 14th.
Meeting was
Thank you.
for the 14th.
Right. Okay. Thank you.
All right. So with that, then we will. I'll get my teeth in this morning. We will move to not have the meeting in August unless there is anything outstanding that arises between now and then. In which case, I will contact and we will sort accordingly. And if I take it, there's no other questions on any other matter with the forward agenda. Okay, well, I think that's been a good meeting this morning, and look at that, at 3 minutes before the dreaded hour of the last debacle, I think we finished just on time. Thank you very, very much for your time and attention. Thank you also to the visitors that joined us today, also to, I think it's Michaela and Edwina for joining us with the legal hats on today. You're very, very welcome here, and we thank you all. Have a very good weekend. Thank you.
Chairman.
Thanks, Mark.